Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Boy, oh boy, do I have a good video for you, ladies and gentlemen, today, titled Silver Will Explode and Fake Money Will Collapse Like in the 3rd Century. History repeats itself to staggering results, and if you have any hope for precious metals rising, then you're definitely going to enjoy this article. It goes back to the 3rd century and reflects upon what happened back then and how similar it is to today's times. So anyways, if you enjoy this video, make sure to smash the like button. Let's see if this video can get 200 likes. The link to this article from goldswitzerland.com will be in the description. Let's jump into it. So history repeats itself with staggering similarities. The crisis of the 3rd century and today have much in common. All empires have the seeds of their own destruction within them. So, if we look back almost 2,000 years to the Roman Empire, we will find exactly the same symptoms as today, which are deficits, debts, excessive military spending, debasement of currency, breakdown of trade, plagues, revolts, war, and hyperinflation. This is exactly what happened in the crisis of the 3rd century, and right now the world is facing the same disasters. When Marcus Aurelius, son of Commodus, in the picture became emperor in 180 AD, the silver content of the denarius coin was almost 90%, but then gradually costs were soaring and revenues declining, and the empire was running out of real money or gold and also silver. More and more was required to bribe a disloyal army. By 235, the situation became serious as many Roman legions were defeated by the Germanic people. The Roman generals also fought each other for control of the empire. Between 235 AD and 284, there were more than 50 emperors, most of them murdered or killed in the battle. The finances of Rome declined rapidly and debts increased substantially. Taxes were continuously raised, but there were fewer and fewer who were in a position to pay tax. From 250 AD, there were also a plague that killed major parts of the population. The more it changes, the more it stays the same. By changing the names and years to today in the above paragraph, the situation is almost identical. From the creation of the Fed in 1913, the US and the dollar have gradually gone downhill, but the acceleration phase started in 1971 when Nixon closed the gold window. Again, the similarity with Rome is astonishing. The real decline started in 235 when the crisis of the 3rd century began. At that time, the denarius had 50% silver content, which over the next 50 years declined to 5%, a 90% fall. Emperor Gallienus presided over this final fall in 260 AD. So the dollar has lost 98% since 1971. The dollar's lost 98% of its purchasing power since 1971. The situation today is even worse. In the 50 years between 1971 and today, the dollar has lost 98% of its real value. Measured in gold, the fall is now accelerating as the graph below shows. The dollar has lost a staggering 83% in the last 20 years since 2000. The next move is 100% loss. The symptoms are the same, but the dates change. What is absolutely extraordinary is that the symptoms of the 3rd century are identical today. Deficits, debts, excessive military spending, debasement of currency, breakdown of trade, plague, revolts, wars, and hyperinflation. Each one of those symptoms is present today. We obviously have debts, deficits, etc. We also have social unrest in many countries, and right now they're rampant in the US. We also have the plague in the form of the virus. So far, there are no major wars, but sadly, with the current geopolitical tensions, the risk is major. Hyperinflation is coming. We don't have hyperinflation yet, which is typically defined as prices are going up by 50% per month. But with the dollar having lost 98% over 50 years and 83% since 2000, it has only 2% to go to zero. And with that massive money printing and credit expansion that is now taking place, I cannot understand how anyone believes we can avoid it today. I'm going to stop right there for a second. That's so true, right? We're pumping all these worthless dollars into a system that's trying to get ourselves out of debt by replacing it with more debt. It's like trying to pay off a credit card with another credit card. It's not going to work, and our system is going to fail. Our financial system is going to collapse to zero. The dollar will become worthless. So if you are stacking fiat currency, which is still smartest to do that because it's the most liquid asset, it's the most liquid form of money, but you still need to prepare and invest into something that has intrinsic value to prepare yourself or to protect yourself against the deflating dollar. So that's why gold and silver is an alternative. There is no solution because we're too deep in the hole. You know, there's no fix to this. We've dug ourselves too deep of a hole to climb ourselves out. The dollar is going to fail. Fiat currency has failed in every single system, as you know, that uses a fiat, but it's designed to fail. There's no way it's ever going to work. So human beings always think that it's different today just because we are here. But how can anyone think that we can solve a debt problem with any more debt? And that's what I was kind of just explaining. When we look back at history, currency collapse and hyperinflation is a very frequent event. Just in the last 100 years, there have been over 60 hyperinflationary events in the world. And in the last 2,000 years, the number could easily be over 1,000. What is totally different today is that the whole world is in a similar situation, and when hyperinflation starts, very few countries will be able to avoid it. A global hyperinflation will clearly be both spectacular and devastating. It is not a question of if, but only when. I think it's going to happen sooner than later. Many are saying that we have no inflation today, so how can we get hyperinflation? What few understand is hyperinflation is a currency-driven event. It arises as a result of the currency collapsing, and the currency collapses due to massive money printing, which we are seeing in the beginning of now. We are already seeing the first symptoms of hyperinflation with the U.S. money supply growing exponentially. So here's the U.S. money supply in millions of ounces growing exponentially. You can see it just exploding this year, starting in April. Hyperinflation happens very quickly, almost out of the blue. As the chart shows below, it can go exponential in a couple of years. So stocks ignore reality. Debts and money printing have been driving stock markets to even dizzier heights for decades. Economic fundamentals in reality have little importance. Just give investors another injection of fake money and they euphorically invest it in the market. It is a perfect end to a world. It's a perfect end to a fake world. You print worthless money and then buy shares that have fake value, hoping that the carousel will spin even faster, not realizing that all the riders will soon fall off. And the music stops and all goes dark. And that's what I'm talking about when you're investing in stocks. You're investing into stock markets, but stocks are pegged to fiat currency. So it's like switching seats on the Titanic. If fiat currency falls, stock markets are going to fall just as hard. So before the music stops, it is loud. It is so loud that investors cannot hear all the warning signals. And we certainly have had enough warnings. It all started in 2000 with tech stocks crashing 80%. That was also a time when stock markets peaked in real terms, but nobody noticed, and most people still haven't. Stocks are down 70%. Stocks are down 70%. How can any investor with even an ounce of analytical ability not notice that since 1999, stocks are down almost 70% in real terms? Real terms obviously mean gold, since it is the only honest money and the only money that has survived in history. It is the only money that over the millennia has maintained constant purchasing power. An ounce of gold 2,000 years ago bought a good suit for a man and still does today. It seems that for a great number of investors, stocks are the only investment they look at and believe and understand. They don't understand enough to realize that stocks in this century have been extremely poor investment in real terms. What they can't fathom either is stocks are now entering a major secular bear market, which will be devastating. To measure stocks in fiat currency, like US dollars, does not reveal what actually happened to the investment. Since stocks seem to have gone up substantially in dollar terms this century, investors feel both rich and content. But in purchasing power terms, they have been losing investment, as measuring stocks in gold reveals. If we look at the chart below, the Dow is down 67% against gold in the last 20 years. This correction to the 1999 to 2011 era fall finished in 2018, and now the ratio is on its way to below the 1-to-1 level, which we saw in 1980. The Dow and gold were both at 850 then. I believe that we will see less than 0.5 to 1, which is the long-term trend line. So the Dow versus gold is an important indicator. Another essential ingredient required to end a bull market is the sucker's rally. Before a market turns down properly, retail investors must be sucked at the very end. These are people who believe that the drop has finished and that the V-shaped recovery is happening. They will soon be disappointed as the markets crash to new lows. The market shows that trading volume in retail brokers has quintupled this year. This is a typical signal that the bull market is coming to an end. With the world economy collapsing, you wonder what planet the stock market investors live on. Can't they see what's happening? Just look at some of the problems in the world. There are hundreds of millions of unemployed or not working in the world today. This could rise over 1.6 billion, which is 50% of the global workforce, according to the International Labor Organization. It is estimated that as many as 40% of the people who have lost their jobs won't get them back. GDP is collapsing, down 30-40% in the second quarter in many countries. Retail trade, factory output, industrial production are crumbling. The airline, hotel, restaurant, and travel industries are hemorrhaging. Over 100,000 businesses have shut down in the U.S., with many small and big businesses becoming insolvent as cash flow dries up. So this is just explaining, so many things. And now I'm going to jump into silver. So silver was at $15.56 at the time of the tweet, and now is at $18.30. Silver is a leading indicator for the metals, in which recent move is very significant. The important point I made in the tweet was that the gold to silver ratio will collapse, and this is exactly what happened. It went from 110 on the 14th to 98 on June 2nd, a fall of 11%. A falling gold to silver ratio is prerequisite for rising precious metals. This means that now we have confirmation. The ratio will continue to fall towards 30 initially, as I said in my tweet on the 29th. This means that silver will go to the old high of $50 and above, but it won't be a straight move there, and it will be a major volatility. This is why I always recommend to hold more physical gold than silver. Gold will move more slowly than silver, but old high of $1,920 should not take too long to be reached before much higher levels. So this is just sharing, insight, and he's saying so many things, and I hope you took this all in, because this is a very, very well organized, very informative video, very educational, and it really does show, how similar the 3rd century was to today's terms, and why silver is going to rise even faster than gold. So anyways, if you enjoyed this video, make sure to smash the like button. If you thought this video was educational, informational, or at least just entertaining, make sure to smash the like button. Make sure you subscribe. I post daily videos. Turn on post notifications as well, so you get immediately notified every time I post. This is Silver Slayer. The link to this article from goldswitzerland.com will be in the description. I'm out. Peace.